Tesla just reported their earnings where they beat expectations on both their revenue and their earnings, and it sent the stock flying higher today. As long as you don't zoom out too far, you might feel good about that. Obviously, one of the big questions is this enough to keep the momentum rolling and keep the hype up for Tesla? Because after all, Tesla, over the history of this whole stock, the reason that it's gone up so much in price and continued to massive valuations is in part because it was a meme stock and a hyped up stock and a retail stock that everybody seemed to love. And with recent news of the Tesla price cuts that came to the cars, you have two separate things that people are talking about depending on whether you are a bear or a bull on this company. The bulls say this is the smartest thing Elon Musk could do. He's cutting prices and taking market share from the EV space, and that's going to grow Tesla's brand over time, and then they'll be in a better spot than where they are today. And if you're a bear, you could say that Tesla cutting these prices shows that demand is slowing down and there might not be enough people out there willing to pay such large amounts for Teslas that a lot of people seem to think that there are. Now, whichever side you're on, it doesn't really matter. Obviously, over history, the bulls have been right about Tesla. The bears are wrong, and that shows in the stock price that it had. But recently, in the stock price, the bears have been right, so it's kind of flipped since the easy money is kind of drained or gone away, and now you got to actually run your business, and the numbers have to make sense for the valuations that you have. And although Amazon right now holds the record for losing the $1 trillion in market cap, it has lost almost that much, somewhere around like $600-700 billion, and they could maybe make up that $1 trillion and be the second company to lose $1 trillion. That wouldn't really surprise me if that ended up happening. But from this earnings call, we see that the gross margins came in at 25.9%, the lowest figure in the last five quarters. And operating cash flow was also down 29% from last year and down 36% from last quarter. So those numbers not moving in the right directions. Obviously, collapsing margins is not a good thing. And add that on to the price cuts that Tesla did, it's not going to add up to the best situation possible. I mean, at the end of the day, Tesla is a luxury car brand. The cars are not cheap. A lot of people say like the Model 3 is a cheap car for people to get, but in reality, it's not a cheap car at all. You compare that to something like a Honda or a Toyota, those cars are cheaper alternatives than going with a Tesla that could run you $40,000. But maybe the price cuts for Tesla cars actually help that. We know that in 2022, cut prices on their cars around the world, which upsetted customers in US and China who recently bought new Teslas at higher prices and triggered an instant decline in used Tesla's prices in the US as well. So obviously that's what's going to happen if the manufacturer is cutting the prices. Then if the used car costs more than the new car, you got to move your prices down, right? That's just supply and demand. Elon Musk had some positive things to say, saying thus far in January, we've seen the strongest orders year to date than ever in our history, currently seeing orders of almost twice the rate of production, which is a good thing. Obviously, if you're hearing that news, the price cuts, could they have something to do with that? Maybe. I think that coming up in the next year or 2 years, Tesla might have some trouble moving product and moving inventory just because people don't have money. They're not flushed with cash. The recession is going to hit hard and is already hitting hard, and we need to think about that. If you're thinking about Tesla as a company and luxury brands, those ones slow down pretty hard. And one of the craziest things to come out of this was Elon Musk saying that he's planning to grow production as quickly as possible in alignment with the 50% compound annual growth rate target we began guiding to in early 2021, which is a massive goal to try and achieve. Obviously, 50% growth is insane, especially when you're talking about the numbers that Tesla does in the tens of billions of dollars. To continue growing at 50% is going to be a large feat. So I don't know if Tesla can keep that up. Combine that with cutting their prices on their cars is going to lower margins. It's going to make it tough for Tesla to continue exploding in value and moving their price or moving their revenues up and moving all their numbers up, especially at 50% compounded yearly. And we all know the Tesla acquisition that Musk did is not a very popular one with Tesla investors because he's pulling money from Tesla to fund Twitter and spending a lot of time at Twitter instead of focusing on Tesla. So that would make any investor a little bit unhappy if your CEO and guy in charge isn't really spending time at the company you're invested in. You're probably not going to be too happy about that. But Musk said that he has 227 million followers, continues to grow rapidly. That suggests that I'm reasonably popular. I might not be popular with some people, but for the vast majority of people, like, the follower count speaks for itself. The most attractive accounts, social media accounts, maybe in the world, certainly on Twitter, and that actually predated the acquisition. So Twitter is actually an incredibly powerful tool for driving demand for Tesla. And in the history of Tesla, they haven't really spent anything on marketing. I don't think Tesla has ever run ads. It's one of the big selling points of Tesla that's how they save money. They don't spend it on marketing so that they can make more money, push more product, do all of this. And to get to the point that they're at with no marketing, that is pretty impressive. But with everything happening, with the prices getting cut on Teslas, the margins getting squeezed, and things kind of slowing down, it is interesting to see Elon kind of switch over and say, Twitter could be a good tool for driving demand for Tesla. Technically, it could still be free, maybe even like super low rates or something that Twitter could offer Tesla for advertising, just because Elon Musk owns both companies, or owns the big stake in Twitter and the big stake in Tesla, right? So maybe this turn towards a thought of marketing might be a turn for the company, thinking now they've got to get their name out and kind of try and stir demand, and it's not stirring itself anymore. And then finally, we've got some Tesla full self-driving. So if you know, full self-driving has been promised every single year since something like 2014 or 2013 or something. So that's pretty funny to see that every year it's full self-driving is coming next year. But now we've got 400,000 people in North America have the ability to test out the experimental full self-driving beta driver assistance system. So it's still not the full thing out. It's still not everybody. And if you paid for it, you might not have access to it either. It's just obviously the 400,000 capped people. But it's at least coming out a little bit, I guess. So you can be happy about that if you're Tesla, but it's still a beta, still experimental, and still promised next year. And when next year comes, we'll probably be promised that it's coming out next year again. So that's the Tesla earnings. Whether you're a bull or a bear, this probably isn't going to change your mind, right? If you super love Tesla, you're going to take all the good from this and say that it's the best thing for Tesla moving forward. If you're a bear of Tesla, you're going to take the negatives from this and say that Tesla is doomed to fail in the future. I don't think Tesla is going to go bankrupt and collapse. Will they start making less money? That's absolutely possible. I don't think you should be writing that off, because cutting prices and talking about demand, which is something Tesla didn't have to do before, that could be signs that they need to stir demand. They don't have the demand there, and they somehow need to get people interested in buying Teslas again. That's going to do it for this video. As always, remember to smash the like button and subscribe, and I'll see you guys in my next video.